22% gain. So, pretty happy with that. And this is the same way we trade, S&P 500. Yet alert was sent to my subscribers right there on May 2nd, and you had another opportunity maybe on May 9th, but that was it. And then it just kept going higher and higher and higher. So where is it going? I already showed. We could see yet another move higher, and it could just continue. We could also reverse, but there is no way to tell this. As always, people think that they can, pick the tops. And when I get to gold miners, I can tell you that I thought that was the top, but it's not. So we're still going higher and higher. High yield bonds, junk debt, ticker symbol GNK, pretty much did the same thing. We had a pretty nice. Also notice that it's very interesting that high yield bonds, whereas S&P 500 actually dropped pretty significantly, and notice it closed below this yellow support resistance line. So that would imply a bear market. But look at the junk debt. The junk debt never even made it that low. So we kind of just got below the blue line and then closed above it. And that was actually the signal to buy. And so if you were, in the market for high yield bonds, that would have been a nice move, and it's about 8% move. Junk debt doesn't move as much as stocks. Stocks moved, S&P 500 moved about 17, maybe 18%. High yield bonds only moved about 8%. Yet they're doing the same thing, so the correlation is very high. So as long as the high yield bonds and stocks are doing the same thing, I'm pretty happy. Suddenly, high yield bonds could start doing something different. For example, stocks are going up, yet high yield bonds are going down. We start to worry. But right now, they're still doing the same thing, so there is really no divergence of any sort, and we continue to think about buying stocks. And this is the reason why we have so many interesting setups right now. Notice how many setups are in the more speculative